Hi, everyone. We're giving it one more minute and then we get started. Okay, I think we can slowly get started knowing that there are still people coming in, but being mindful of time and knowing that we have a lot of discussion happening in a bit. So ready to get started. Good afternoon to all of you and welcome. It's a great pleasure to have many of you joining our webinar on climate lens impact finance in MENA, which I'm happy to already announce is the first of a series of 3 webinars around the topic of climate impact finance, but more to that a bit later. My name is Aline Bussmann. I'm co-director at CIWAS and part of the Regional Innovation Hub that implements the Water and Energy for Food Grand Challenge program in MENA, which is the host today. Now, we have the opportunity to hear in this webinar 4 speakers, investors, enterprises, support organizations that all have unique experiences when it comes to facilitating investment, raising finance, and investing in climate impact. So I'm very happy that with us today are Hussam Alam, who is managing partner at the Climate Resilience Africa Fund based in Egypt, which is investing in sustainable agriculture and nature economy enterprises. We have Pamela Saber, who is part of the Water and Energy for Food team. She is heading the investment readiness and brokering unit at Water Energy for Food, and she is based in Lebanon. And then to show you that this is a truly regional webinar, we have Ruba Marmane, who is investment manager at Amam Ventures and representing Jenny today. She is based in Jordan, and Amam Ventures provides financial and non-financial support to impact companies, mainly in the field of gender and climate. And last but importantly, we have Farah Emara, who is co-founder at Fresh Source Global, which is a business based in Egypt that has made quite a mark through its fresh food supply chain platform solution. So thanks to the 4 of you for taking the time to join us today and spread a bit of your important experiences and insight when it comes to climate impact investing. Before we jump to the discussion, I'll give a very brief introduction to Water and Energy for Food, which is, as I mentioned, the host of this webinar, but also a bit of context on the relevance of today's topic. And a short disclaimer, you will not see any presentation or slides. We'll keep it very light and discussion-based. We'll have a recording, which we'll upload later on the We4F YouTube channel. So anyone who would like to follow up, you can do so. We4F, Water Energy for Food, is a multi-donor initiative that started in 2020, and we're covering a region from Morocco to Iraq, providing financial support, technical assistance, and investment facilitation to later stage startups and SMEs who have either water food innovations, energy food innovations, or water and energy food innovations. And this initiative is implemented by the MENA Regional Innovation Hub, which by itself is run by a consortium of organizations that are all locally rooted and have been quite engaged in private sector development in climate-related sectors. And those are namely Berytech and CWAS and Chemonics Egypt and the International Water Management Institute. Now, we4F started around a bit more than 4 years already in the region with a very concrete approach and goal. So we wanted to focus on businesses at the scale-up stage that have a proof of concept and traction in the market, but still a lot of untapped potential when it comes to growing the environmental impact, the social impact, but also the economic impact. So, for example, looking at companies that want to make water efficiency technology accessible to smallholder farmers, or sourcing produce from female farmers who get empowered as fairly paid and supported suppliers, or making food production more water and energy efficient, or recovering waste resources to avoid pollution and create new nutrient products. So these are just examples, and we have worked with around 60 companies over the past years who collectively have put down quite an impact. So just to give you another example, those companies have collectively supported around 500,000 smallholder farmers and end users with their innovation, but they have also achieved water savings of around 10 million cubic meter along the food value chain. Now, those are impressive impact numbers. There are, of course, also financial indicators to their scaling journey, but I let Pamela speak to that a bit later. And I think this progress sounds great, and it really comes down to the massive work of what the companies are doing. We4F support and investment is rather catalytic in nature and is looking at the impact and the business side. But we know that the companies we work in We4F, but also many others out there that we don't get the chance to work with, but that are providing climate solution, they need more than what we can offer in terms of investment, in terms of advisory, in terms of technical assistance or network support. And if we just look at the investment side, I think the challenge is that we're in a region where we have very thin air when it comes to investments or impact investments that have a dual objective to generate, on one hand, the financial return, but on the other hand, also positive impact, now in this context, on climate and environment. And if we want to be very radical, the MENA climate finance part of the global finance that is dedicated to climate is literally a drop in the desert. So we have 6-7% of global climate finance in the region. And this could be from public, private, or alternative sources of funding. And I think you can imagine with what we are facing in terms of needs, that's really minimal. There are some statistics that say that amount can only cover around 5% of what we need to mitigate more emissions, more climate change, handle the management of scarce resources, be it water, be it land, and help adapt to the risk that we're already seeing on ground. And that part that we have, which is not a lot, is going so far mainly to the energy sector, which is important, but we also need to look at water, agriculture, waste management, to just name a couple of other critical sectors. And we also don't only need that money for public projects and infrastructure, which again is critical, but we also have a lot of SMEs and startups that are spearheading many of these impact investment initiatives. And I think I'm giving a bit of that relevance out there, but at the same time, we don't want to look at what we don't have. So we rather want to discuss today what we have and how to build on actions that are already working on a change. And I think our 4 speakers will show that there are climate SMEs actually raising finance, that there are investors providing climate finance, and that there are specialized support organizations that can help both SMEs and investors. But enough of me talking. I would like now to give the word to our experts. And that being said, please feel free to the audience, anyone who participates, to put questions you have in the chat, and in the next 50-60 minutes, we'll hopefully tackle many of them. But if we don't, we'll try to have them be answered in a follow-up Q&A in the next hour and a bit. And I'm happy to now get started. And I think the most interesting way sometimes to start a discussion is to look at an enterprise case. And I'm looking at Farah, who is with her enterprise part of the We4F program, but of course, the journey started much earlier. I think you started in Egypt around 5 years ago in the agricultural sector. And maybe you can describe a bit what your business does and which problem you are trying to solve. Farah.
Sure. Thank you, Aline. And I'm very excited to be here today to share my story and to learn also from the other great panelists. So Fresh Source, we launched in 2019. My co-founder, Omar, and I, we basically resigned from our corporate jobs, and we're really passionate about building something in the agri space. We believe that despite agriculture being one of the largest industries in Egypt, innovations that exist in the market access space were really lagging behind compared to other agriculturally dominant countries. So we decided to take that leap. Basically, Fresh Source is a B2B agri supply chain platform. So we use data and technology to streamline the fresh food value chain, and we work directly with producers. These can be small, medium, large-scale farmers, and handle the entire operations, storage process, and finally deliver to businesses. So we're strictly B2B when we work with hotels, restaurants, e-commerce apps, hospitals, schools, and so on.
Thanks, Farah, for that overview. Now we're looking a bit at the investment side of your growth so far. So maybe you can explain a bit how you started developing your investment strategy. What was your first investment? How did it have an impact on your progress? Looking backwards a bit, where you started when it came to fundraising.
Sure. So it's been a very, how can I say it, exciting adventure, our fundraising journey overall, with some rounds that were much easier to close than others. And, you know, each one has a learning that you can take from it. Our first investment, we were very deliberate with who we wanted to bring on board. It was someone that I knew from previously working in Endeavor. And he was always a very tough investor. So I wanted us to kind of go to him, share the idea before we even resign from our corporate jobs, just to see if there's buy-in, or are we just the only ones that are passionate about the solution. So we approached him. He has an agri-focused fund. So most of his investments are in the agriculture space. There are some other ones, but that is really where his expertise lies. We contacted him pre-revenue, pre-company, pre-everything. It was just Omar and I. And he was really excited to meet. But the issue was he was traveling for around 2 months, and the only time to meet him would be the following morning. So this conversation was maybe taking place at 9 p.m. and our meeting was set for 10 a.m. So Omar and I got to work. We picked the name. We just did a logo on PowerPoint because I have no graphic design skills. And what we were really adamant about and what we really believed in was our model. So we were really, that was what we had spent a lot of time on. But when you are doing the deck overall, there's the team, there's the branding, where do you see this company in the future? So it was really a fun but challenging experience. Even the name, I remember there was a company called Fresh Direct, and we just did synonyms to get similar names, and we're like, okay, Fresh Source, that's it. The logo, we're like, let's just do any fruit. My favorites are strawberries, so we did the strawberries. And that was really how ad hoc it was, just to get ready for that meeting. We went and we presented it, and alhamdulillah, knock on wood, we were his first pre-revenue investment, and still only pre-revenue investment until now. So he really gave us that backing and gave us that confidence to pursue a building Fresh Source, and without that first investment, I highly doubt we would have a company even. So that was a really exciting experience. That was in late 2018. By the time we closed the round and got the money, we launched in 2019. And then the round following that was 2021, where it was quite a difficult time to fundraise. And no, I mean, sorry, 2020. And it was quite a difficult time to fundraise because just the world was panicking over Corona. And luckily, our business model had already shifted by that time before Corona. So we had started targeting a lot of the e-commerce apps, and that is really what kept us alive during all the shutdowns and the lack of tourism. Hotels weren't purchasing that much. Retail also was going down. A lot of people were scared to go into public spaces and resorted to online shopping. And luckily, we had already been the exclusive supplier for Talabat, which is Delivery Hero's e-commerce app here in Egypt. And we were their exclusive supplier for 6 months around prior to that. So we really took advantage of that peak during COVID. So in 2020, we did a small round. It was difficult to get investor buy-in. So we did a friends and family round. And we were able to raise around $350,000 through that. And then that allowed us to sustain our growth until 2021, where we were a more attractive company, and investors were really excited to invest in Egypt and to invest in climate resilience or climate tax agribusinesses in general. And we successfully fundraised from a UAE VC and a US-based VC. That year in 2021, where we raised around 1.5 million. And then in last year, we closed another round from African based VCs as well.
What an experience, huh? In 5 years in terms of fundraising. I'm taking a bit of a pause on the question of the fundraising efforts moving forward. We'll ask that in a bit. But thanks for already explaining how you have, from bootstrapping to VC funding, taking a bit of experience. Now, moving to Pamela, We4F, or Water Energy for Food, supports companies like Farah and Fresh Source through investment in investment readiness work, but also investment facilitation. Can you explain a bit more, why is this needed? How is it happening practically?
Hello, everyone. Thank you, Aline, for the question. So at We4F, we focus on de-risking impact-driven companies operating in the water, energy, food nexus. And Fresh Source is one example of the companies that we have on board. The purpose is to make them more attractive to investors and help them secure funding. So this is very critical, especially with the pressing challenges in our region, like water scarcity, food security, and environmental concerns. Not to forget that financing for those sectors is very limited, as already mentioned by Farah. So in our approach, we focus on 3 main areas. One, we offer them catalytic grants of up to 250,000, which is tied to specific KPIs and transformational work plans. 2, we provide them with technical assistance. This includes consultancy in areas like growth strategy, marketing, business model, feasibility study TA, for example, in the case of Fresh Source. We guide companies also through their investment readiness journey, and this starts with capacity building. We help them identify their funding gap, their investment need. We then provide them with technical assistance to prepare the investment documentation that are required by investors, like the financial models, pitch decks, and other materials. So once we have this investment readiness and the documentation in place, we help them map potential investors, we establish the connections, and we facilitate the entire process from the initial outreach, due diligence, term sheet negotiation, until the deal closure. So for us, this holistic approach helps reduce the risk profile of companies in front of investors, and therefore it makes them more appealing to investors that are willing to invest in this type of companies with less risks.
Now, it sounds, it sounds very smooth in theory, and I know how much work you put in there, but I think you also experience that fundraising by the enterprises or for the enterprises is not easier. Can you share a bit, unpolished, what have been those experiences and challenges?
Exactly, Alien. So over the past 4 years, we had achievements. However, we had a lot of challenges along the way. So we facilitated the fundraising of over $34 million in investment for 23 innovators in our portfolio of companies. Among those, we had success stories, big success stories, one in Egypt and one in Morocco, where they were able to raise a total of $20 million in equity due to their technology and innovation components. Whereas for the others, the average ticket sizes ranged between $200,000 and $1 million. But not all transactions closed smoothly. So we had a number of challenges along the way, mainly linked to the political instability and economic volatility across MENA countries like Lebanon, Egypt, and Iraq. Especially with the currency devaluation, the capital controls, the risks around the repatriation of funds, which make it tough for investors to feel confident and invest in those companies. Second, we have the profitability. So we have companies and innovators we work with that they are still facing challenges in making positive EBITDA and realizing positive profitability ratios, so which make also investors hesitant to engage unless there is a clear path forward. And this is how we assist our innovators in becoming profitable and more appealing for investors. Then there is the issue of high interest rates. So we have also the high interest rates, especially with the limited access to subsidized loans in the MENA countries. We have also in Iraq, for example, the religious concerns about interest-bearing loans, limiting also the financing options even further. Lastly, we're dealing with illiquid financial markets. So we have limited exit strategies, which adds another layer of difficulty when investors think about their exit options. So we can say that these factors collectively contribute to a significant funding gap for SMEs in the MENA region.
Thanks, Pamela. It sounds like not a walk in the park, but let's hear from the investors now. And I'm addressing maybe the first question to Hossam, who is one of the few truly dedicated climate investors in MENA. And Hossam, maybe we can start by you describing a bit the rationale of the Climate Resilience Fund and what are you doing today to invest in enterprises?
Sure, happy to. Thank you for the invitation, and I hope you can hear me okay. So
Perfect.
I don't think it's fair to say we're one of the few climate investors, because there are many climate investors, but it's true we're one of the few pure climate venture capital investors. That's correct. And our rationale really starts with the following kind of facts. Our focus is very much on Africa, not so much the Gulf. So we're North Africa, but not all of MENA. And in the geography that we look at, it contributes about 3% of global emissions. So our view is that's a very small number. And to try to offset or reduce or shave some of that off is not big impact. On the other hand, the same geography risks losing 60% of its GDP by 2050 to climate change. And that's a much bigger problem to, whoops, beg your pardon. That's a much bigger problem to address. So we see ourselves less of a climate mitigation story and more of a climate adaptation story. And just for the members of the audience who have heard those terms but don't know exactly what they mean, climate mitigation is about reducing pollution, offsetting pollution, or finding ways to mitigate against pollution. So maybe we're protecting targets of pollution so that the impact of the pollution is not so severe. Whereas climate adaptation is recognizing that climate change is coming and how do you adapt and get ready for it. So we see our geography, so that's North Africa and Central Sub-Saharan Africa, as being much more of a climate adaptation story. And I would argue that the same is true for the whole MENA region, because MENA, of course, is highly susceptible to climate change as well. Now, when you look at climate adaptation versus mitigation, and this is absolutely true across the MENA region too, one of the economic subsectors that are most vulnerable is agriculture and food. In broader Africa, it stands to lose 20% of its target productivity due to climate change. And I think the number is higher across the MENA, although I don't have the exact numbers. I know that countries in the Gulf are extremely vulnerable to the impact of climate change on their food systems. So our climate fund, our fund invests in innovation and tech ventures at the intersection of agri-food systems and climate resilience specifically. And here we use resilience as a proxy for climate adaptation. That's our story.
Thanks, Osam. I would like to immediately maybe follow up on 2 points. The first one, if you can describe a bit more your investment instruments, maybe ticket sizes, what type of enterprises you are looking at, so we get an idea, but also are there specific business models where you see the biggest potential? I mean, maybe looking at North Africa, because we know the markets are quite different as we go from region to region and country to country, but are there specific business models that for you also as a VC, you know, you see a lot of potential on the adaptation impact side, but also being financially viable?
So unlike climate mitigation, where there are a couple of sort of hero industries, like energy transition away from power generation from fossil fuels to renewable energy, or mobility away from fossil fuels to electricity. These are kind of the two hero industries of the climate mitigation area. There are no hero industries in climate adaptation. There are just hundreds and hundreds of smaller opportunities that can scale to a greater or lesser extent within their economies, but that each address climate resilience in a different way. So because we're an agriculture, food, tech player, we have a thesis that sounds as follows. We are a seed stage investor. Sorry, the current fund is a seed stage fund. So we're investing a couple of $100,000 first tickets. For a follow-on investment, it might be $1 million or plus or minus. For a third follow-on investment, it might be $3 million. That's the profile of the sorts of investments that we do. The sorts of sectors that we invest in are any sector that arms farmers with the tools to be able to support themselves better, get a larger share of the value chain, reach markets more effectively, increase their buyer or seller power. And the reason that those factors are lending themselves to climate resilience is because while they're growing muscles due to these tools, climate change is eating away at their share of the cake from the other side. So digital marketplaces, platforms, financial technology tools, all of these for farmers, that's a very interesting area for us and has that typical venture capital profile of relatively small investment, high defensible tech innovation, very large growth market. Other sectors that interest us are farming technology, so technologies to farm existing or new products in new and interesting ways. So here we're looking at using satellite data to remotely monitor farms and monitor soil I monitor leaf health and that sort of thing. We're also very interested. If you follow us on LinkedIn, you'll find more information on this. But we're also interested in innovations in the food supply chain. So lots and lots of food is wasted in the Middle East and to a lesser extent in Africa, but still very, very significant quantities. 40 to 50% of food is lost in the chain. That's the kind of thing that Farah at Fresh Source is also addressing. And anything that can reduce that loss is a climate win, both because the food goes on to decompose and release emissions, but that's not the big issue. The big issue is so many resources get poured into farming, water, energy, fertilizer, herbicides, some useful, some harmful, right? I mean, herbicides and pesticides are harmful inputs into the planet, right? And they have very high climate footprint. They're all being poured into the land to produce food that grows very effectively, and we throw it straight in the trash, right, in one way or another. So if we can reduce waste in the food sector, at least we will get more food for the same amount of inputs that are going in, and that's a climate win. And then we like biotechnology, we like new foods, so we're particularly keen on insect as a protein alternative for animal feed, but also where possible for human consumption. I mean, that's sort of a bit futuristic, but it's happening in some parts of the world right now. We're invested in an insect protein company for human consumption in West Africa, and that has a direct climate benefit. You know, the dairy products that we have gotten used to eating come with a huge climate footprint, and if we can wean ourselves off that kind of protein and towards something that's much more sustainable, you know, farmed under much more controlled conditions with a much smaller water and climate footprint, that is a big climate gain. So these are some of the sectors that you can support and have a climate adaptation win or gain that are highly venture backable with very, very large markets, defensible technology, and that excite us.
Yeah, thanks for explaining how diverse the adaptation sector is, and how under the agriculture umbrella, you basically can tackle so many resource issues such as water, energy, resource recovery, waste management as well. So it is not, we're not only talking about agriculture here. I think that's important to have a diversified look. Thanks a lot, Hussam. We'll come back to you in a bit. But jumping to Jordan, Ruba, you are here representing Amam Ventures, and I think you have an interesting setup where you are more than a fund, and you have started with an impact angle that is very much specific to gender, but you broadened it over time. And I think climate plays a big role now. We, as We4F, also worked with you a bit on that lens. Can you explain what is Amam Ventures' mandate today?
Thank you, Aline, for having me. We at Amam Ventures started in 2021. And we had the aim to help and foster inclusive businesses in Jordan and beyond by offering financial and non-financial support through our technical assistance arm, Arkan. We established Arkan with the aim of developing a pipeline of companies that are prepared to secure funding, be able to scale up, and potentially become leaders in their field. If we want to talk in numbers, Amam has made 5 investments to date, all of them with a gender and impact lens. Arkan has also delivered over 3,000 hours of training through more than 10 different programs. These programs have directly supported over 350 companies and more than 750 individuals. 90% of our participants were women, and our focus is on enhancing their strategy, building their skills in various business and financial areas to help them on their journey of growth.
And Ruba, thanks for that. Now, I think asking a question that many have when they wonder on how impact investment works. So how do you actually assess and track the impact of investment opportunities, be it on gender, climate, or other areas of impact that you want a company to leverage and grow on?
So when investing with an impact lens, it's very important to remember that our valuation criteria must extend beyond financial returns to include, a comprehensive assessment of the social and environmental effects of this investment. On a fund level, at the beginning, we need to be able to effectively measure and report on this impact. And we have to start by clearly defining the key components that we want to address by establishing a broad framework for our evaluation at the fund level. Then when we go ahead and make an investment, what we usually do at Amam is we conduct a full-fledged analysis of the company, which covers financial and non-financial aspects, which includes by definition impact, to help us understand the company, where they currently stand, and where they want to be in the future, and what are their goals when it comes to impact. The outcome of this process is setting specific, measurable, and I have to repeat, measurable impact KPIs for the company, and to help us do an ongoing assessment on how the company is moving from point A to point B. Based on all of these insights, towards the end, what we develop is a tailored valuation creation roadmap. This roadmap would help the company outline for us the support and capacity building activities that the company might need to help her reach both its impact and financial objectives.
But so that essentially means that on a fund or portfolio level, you are not just able to say our companies had to contribute to certain SDGs, but you are able to very specifically tackle or document and prove the impact that these companies did in terms of gender, in terms of climate achievements. Is that correct? Or what were your learnings on that? I think that is also not as easy to implement as one thinks, when you set up the process.
Yes, definitely. So you have to actually be able to measure and record all of your impact metrics. And when you want to say, I did 1, 2, 3, you have to have proof and evidence of that impact, and it has to be recorded. And you need to have that balance and record it all on measurable, as I said, and impactful KPI metrics.
Thank you, Ruba. I'm jumping with that question to Farah. You are the one who is generating that impact on ground. To which extent do you feel you are able to leverage the impact in your fundraising efforts? How critical is that? What is the challenge in it? Is it more an opportunity? Do you understand it well? Do the investors understand it well? What's your experience in that?
Sure. So I guess it really depends on the investor. We've had investors that see this as a nice to have, but they're focused more, of course, on our actual sales, our profit margins, our growth. And then the social impact or environmental impact aspect is something that they're really excited to have, but it's not a critical factor. And then there are other investors that to even unlock the door or to even start a conversation with them, such as Hussein, for instance, then you would have to really focus on that sustainability and climate tech angle. So just as any founder trying to raise it, it's all about positioning. So when you're going into that VC, you're focused on that. And then when you're going into that type of VC, you focus on the latter. In the beginning, maybe I didn't understand how to really quantify our impact and how to make it an appealing aspect for investors to support them in their own fundraising when they're going to speak to LPs. So we really started focusing on it. And of course, the work we've done with Water Energy for Food has really supported us as well. Even though it's been a short relationship, we're already focused on reporting those impact numbers. So what we really drive to our investors is our food loss, and that's something that we've been really proud of from the beginning, because the average food loss and wasted, so not just food loss, but food loss and wasted percent in Egypt can actually be north of around 30%. And we're really proud of having a 2% food loss rate. So there's a lot of savings that come from that in terms of saving for transportation, water, land, even so soil, and just really building our own value chain to optimize the way that we're saving. So having refrigerated components from the beginning of the value chain until the end. So everything from when it's harvested, even the loading and unloading docks are also refrigerated, and of course the storage and packing stations. So this is something that we're really focused on, and it's a number that has opened for us other doors, such as the relationship that started with you, and also other work that we've done with multinationals, with WFP from the UN, any initiatives that they have for food security, being part of COP27 and COP28, our partnership even with the Ministry of Investment here in Egypt. So even though, of course, it will unlock investments for you, it's also something that will unlock a bunch of other things. So in terms of your brand equity and how you're building that, it is critical to have, in my opinion, a social angle to the startup.
Yeah, which goes beyond investment. Thanks, Farah. I immediately go to Hussam, who I think is an example of an investor who looks at both, right? The financial performance and the impact outcomes. Now, how do you prioritize or balance, which I think is always a bit the question, where there is a perception that impact investors don't care so much about the financial return, or some do, but they don't really care enough about impact. How do you deal with that? How do you work it out with your investors and the enterprises?
So when you're having a discussion with an impact investor, I think it's a legitimate question. Are you more returns oriented? Or are you more impact oriented? What is your return expectation? Because that number might be below market norm for the level of risk that's being taken, because they're trying to support the climate agenda. So we are a commercial returns impact fund. That means we seek impact and we seek fully market adjusted returns. We will not sacrifice one for the other. Our initial screen is an impact screen, and then we get into commercial due diligence on any deal. So we make no distinction. They are equally important within our fund. But the investors who invest in our fund, they have different objectives. Some of them are primarily commercial returns, but they need a bit of climate in their portfolios, but they're not very rigorous about how they measure it. Others are extremely rigorous about how they measure and seek very specific climate impact and gender impact, because that's also one of our impact goals. But they seek full investment returns. And we have other investors still who actually, they're concessional in their money. So they say, for example, if the fund does not perform very well, let other investors take their money first. And if there's none left over, we're fine to not get any, as long as you've delivered impact. That's sort of more concessional in nature. We don't have a capped upside investor, but there is a category of investor that says, I'm seeking impact and I'm happy to limit my return to, for example, 5 or 6%. If you make more than that, distribute the excess among the other investors. That should encourage them to come in and invest in your fund. So there are different categories of investor, and there is no rule of thumb for any kind of impact investor. It's a conversation you should have with any impact investor you meet. What are your return expectations? How much are you like? Are you concessional? Are you giving up something for the impact? Do you want financial returns at all? These are legitimate and valid questions, because, like I said, there's no rule of thumb.
And for that was now looking at the investor side. Now, if you look at the pipeline, do you feel there is an even distribution in that spectrum also, or do you have more coming to you that are more on the commercial side, but impact is not that strongly, elaborated or documented yet, or the other way around, or you find a bit of everything?
No, I don't think you can answer that question, and I'll tell you why. Because there are many very good businesses that have excellent prospects in the long term that come to us, but they just can't give us venture returns. So venture capital is very early stage, very high risk, and seeks very high returns. Not all businesses can deliver those sorts of returns over such a short period of time, but over a long period of time, if they could attract a certain type of capital, a certain class of capital, they could be perfectly respectable market-adjusted returns. So I don't want to write off all those good businesses that have come to us and for whom we were not the appropriate source of capital, and just say these are all impact, these are all impact companies that can't make money because we are, looking for the, those deals that make us go whoop to do, VC type returns.
Right. Thanks, Hussam. Ruba, do you have a similar investment strategy so far as Hussam was describing in terms of your expectation to businesses?
Yes, actually, we do have the similar investment strategy. But if I can add to it as well, you have to always keep in mind that impact focus needs to be balanced with financial returns, and they have to translate into, I would say, a coherent strategy, and it has to be convincing, as Sam said, to potential LPs. This is critical to get the buy-in from potential investors. And the strategy also has to mention, when you go to any investor, your strategy has to mention your sectors, your geographies, information about the intended portfolio composition, allocation towards various investment instruments. For us, as an example, we have two different instruments, revenue capital and redeemable note, and information on how those investments will be structured to be in line with the financial and impact required returns. You also have to mention your intended portfolio size, typical company profile, linking it to the investment instrument. As an example, a brick and mortar company for us will definitely consider it under a revenue capital model. All of these companies, they have to make sense from an investor's perspective in order for them to be convinced of a financial and impact combination. And they need to demonstrate probably focus on impact that will not eat away from expected returns for the fund.
I think what interests me also about your portfolio, Ruba, at Amam Ventures is that you don't necessarily only have businesses that have a dedicated climate solution, that have, a water efficiency technology or an agri-tech platform or something similar. I think you look across many sectors and then you incorporate that climate lens and that gender lens. I was wondering if you could give us one or two examples of businesses that you worked with and how you were looking at their impact.
Definitely. So as you said at the beginning, we were looking at companies with a gender lens. And then as we moved forward, we started to broaden the horizon. And one of the companies that we worked with since almost the inception of Amam Ventures, and the process took over 2 years to actually close the deal, was one which we started off with a gender lens impact. It was a swimming complex. Most of the coaches and even the kids going to learn how to swim were females. And that's where it became very interesting for Amam Ventures. It's a great company, swimming, teaching sports for kids. Majority of the coaches are coming from are females. And then as we started looking at it, and actually we discussed it with you guys at CWAS as well, is when it comes to swimming, we are in Jordan, one of the poorest countries when it comes to water resources. And it was very crucial for us as this company, as this investment wanted to build first of its kind indoor short course Olympic swimming pool in Jordan, that we have to take into consideration water preservative technologies and how they can help reduce water waste. So those were one of the challenges that the company is still working on and trying to find alternative and resources of how to be efficient on that aspect. And as I said, for this company, we have to be patient. I mean, the deal took almost 2 years and we're still in the process. So as many said, you have to be patient when it comes to impact investing.
Right. But you definitely show that you can go beyond ESG incorporation and dive really deep on potential positive, but also negative impacts that you want to mitigate or improve. Pamela, I'm going back to you because you're working with the companies on getting them ready to pitch in front of investors and fundraise. And you are working on the financials with them, but you also work on the impact. How are you able to leverage that? What is the challenge? What is needed more when you do that work?
Okay, first of all, we are noticing that there is growing shift in investor interest toward climate and sustainability-focused enterprises on the global level. And recently, as you can notice, even in the MENA region, we have increasing number of emerging impact funds like climate resilience funds and Amam Ventures and others. So we are trying to leverage on that, especially that we have as V4F the impact-driven approach. So we have the innovators that they are active in the sectors of climate mitigation and adaptation. So we tick the box of the sectors as per the criteria of a climate resilience fund, for example. Also, we have our innovators reporting on critical KPIs such as increased food production, water conservation, reductions in greenhouse gas emissions. So when we train the innovators on pitching, we make sure that they include, for example, the impact component in their pitch deck presentation, just to attract the right impact investors that will look for both the financial returns and positive environmental and social outcomes. And here we have several examples and success stories that were built on the impact. I will share 2 examples. For example, our investment readiness team is currently facilitating a transaction between an impact fund provider based in Nairobi, Kenya, funded by SIDA and UNCDF, and one of our Egyptian innovators working in smart irrigation systems and renewable energy. So the interesting part is that this transaction at an 8.5% interest rate for an amount of $2.5 million in debt would help reduce the company's weighted average cost of capital from 34% to 21%. And this showcases how clear impact can lead to favorable financing terms and unlock access to funds, especially that our innovators at their development stage, they need this type of subsidized loans that will remove the burden of high interest rates on their financial performance. So also another example we can give is the case of Green Watek. It's a woman-led wastewater treatment company that won the Cartier Women Initiative Prize due to their impact and gender component. So since it's a woman-led with high impact on women. So this prize provided the company not just they gave them the grant amount, but also they opened the door for them to have a debt financing. So this will prove one more time how achievement and impact can really open new doors for financing.
Okay, thank you, Pamela. now looking at the case that we have in the room, Farah, back to you, and looking at the current situation of your fundraising needs, and where you stand in terms of working with investors on your bigger investment case moving forward. What additional supports and investments do you require right now for scaling?
So definitely we're working towards, fundraising a larger round, inshallah, next year. Until then, we have very clear milestones that we are working to achieve by that, and then launching another round towards Q3 of 2025. Until then, we have our profitability targets, our growth targets as well, and of course our impact targets that we will focus on. For the investors that we're planning on working with, we're looking at large, obviously, investors based from Africa and the US. And the reason for that is just to make it easier to fundraise future rounds as well.
And what have been now the challenges so far? I mean, also I have a couple of insights, of course, from the We4F team, but what do you encounter now in discussions with investors that are challenges that are yet to overcome? Huh?
So of course there are many challenges, some that are related to Fresh Source and some that aren't. But the main challenge is the macroeconomic climate here in Egypt. So a lot of investors are very wary of having another devaluation, as they lost a lot of the value of their investments with the previous devaluations. And what we're working on to mitigate that is to secure some sort of foreign currency, foreign revenue. And that is coming from basically working on our exporting, and starting to have some revenue in USD. Other ways that we're preserving our or trying to convince investors that we are a safe, relatively safe bet is by having strong numbers. So we're working towards our profitability targets. Of course, being profitable as a company just shifts, I believe, kind of shifts the power dynamic a bit when you're negotiating with investors. When you have a very high burn and short runway, you might accept a deal that might not be the best, have your company in its best interest, but you're forced to accept that because of your runway. So one of our main targets is to become profitable so that we can have better negotiating power when we're speaking to investors, and have just some more control when it comes to when we're fundraising and who we're fundraising from and so on. So the main challenge is, I believe, the macroeconomic climate, and the ways that we're mitigating that as much as possible is by securing foreign revenue and by reaching our profitability targets as well. Of course, there are other challenges that arise, but these can be very Fresh Source specific. So they can, really change from one company to the other. But just for the startups here that are looking, for advice, when you reach the Series A mark, a lot of the investors will be focused on the type of team you have. So your C-suite, especially, how capable are they? What kind of caliber did you hire? And can they actually take the company into its next phase of growth as well? Another thing that they look for is who else is going to be on their cap table. So who else is joining that round, and they want to see deep pockets from those funds, so that they can feel a bit more confident when it comes to fundraising future rounds. So those would be the two main things that I'd focus on after focusing on the other aspects.
The bigger challenges.
Yeah.
I don't know if maybe Hussam and you already had that discussion privately, but wondering if Hussam would mind to share now with the audience a bit his view on challenges like the ones that Farah mentioned, but generally also your advice to SME that are interested to approach you? What should they keep in mind? What should they have in place?
Sure. And yes, Farah and I have spoken a few times, and I think the fact I'm not using her nickname on a live webinar is showing great self-restraint. Anyway, look, the advice I would give is the advice that startups are hearing everywhere, right? Not, solid business plan with a defensible technology or a defensible edge, good understanding of who your competitors are or what the competing products are, and a path to growth and a path to cash generation and profitability. These are sort of some of the key takeaways that I would look for in a presentation by a startup. In terms of challenges that startups are navigating or that ventures are navigating in the economy, I think Farah captures them very, very well, right? I mean, leave aside pandemic risk and all that sort of thing. Currency risk, macroeconomic risk, political risk, these are the big ticket items for almost any venture in our geography. It's, to a greater or lesser extent, those are the issues that we're dealing with. It just so happens to be that the markets, the smaller markets have fewer problems, the bigger markets have bigger problems. It's as if you can't find the sweet spot. But that's, yeah. So strategies to circumvent, especially currency, are very important. Farah talked about export orientation. That's very valuable. Working with products that substitute import, so import alternatives, that the price can be somewhat pegged to the import price. That's valuable. And then it's up to fund managers like me to diversify away risks like foreign exchange risk and political risk. But I really have nothing terribly intelligent to add otherwise to what Farah said.
And we have that small and big markets in the region. And I think also the currency case is unfortunately not only unique to Egypt. Pamela, you are working, between the investors and the enterprises, and you are managing the expectations and you are navigating that a bit. What is it that you have learned or recommend?
Yes, so mainly the challenges that the innovators are facing when dealing with the investors is, first of all, the heavy documentation requirements. So as mentioned by Hussam, they should have a strong business model, financial projection, governance structure, impact reporting, and all that. So it's the heavy documentation to the high interest rates. So a lot of our innovators are facing the difficulty to accept funding with high interest rates that they cannot serve in the future. The lengthy process, so sometimes the investment it's taking up to 18 months as a timeline. The high perceived risk in the MENA region, it was summarized very well by Hussam and Farah. The macroeconomic challenges, the currency valuation is something that is a center of focus of investors, and how to mitigate the currency volatility in the MENA countries. And we have the guarantees required by few investors. It's also one of the challenges to fundraise. So to navigate these challenges, we are helping those companies to be investment ready. So in terms of heavy documentation and data room, we are helping them to build the governance foundation, the investment documentation, and to prepare a clear risk mitigation framework. So when the investor will ask about the currency risk, they will be able to present a clear way forward to mitigate this risk. It is much needed initiatives like We4F that would de-risk the companies through catalytic grant, through guarantees, and also the impact funds and innovative financing solutions are a solution that is needed for the MENA region. So a solution as blended finance mechanism can support those companies to access affordable funding for their growth, which will help them to increase their impact in the region. And something that I would like also to flag then when it comes to investors, and going back to what Hussam has mentioned at the beginning, when it comes to investors, it's very important to for them to recognize the long-term benefits of impact investing. So this approach will not only create social and environmental benefits, but also will enhance their profitability on the long term, especially with by reducing risk linked to regulatory changes and potential environmental taxes. So this is something that it should be considered when looking into impact investing as long-term profit generation.
Thank you, Pamela, for summarizing a lot of the points that I think popped up during the last hour. Last question to Roba, and then I think we'll go through the questions that were posted in the chat. Now, Amam Ventures has tested different ways of investing, but also supporting beyond investing. Where do you feel now that the biggest gap or opportunity lies when it comes to climate impact investing? Is it for you more working on the pipeline side? Do we need more investment instruments? Do we need more advisory support? Where is it that you feel more work is needed? And you can speak from a Jordan lens or regional lens, but that would be interesting.
Yeah, well, definitely all of that you have mentioned are needed, but still, so far, I think the biggest gap is still in the mindset of traditional companies, traditional commercially driven investors, who often look at impact as something that is not for profit and still cannot see that impact driven can also still be profitable, probably at a lesser rate, but still they can be profitable and they can maintain themselves. We have seen many great companies, be it in Jordan or in the region, that have made it big and significantly, but they still don't realize that they have an impact angle, and they have not necessarily even positioned themselves as impact first. And once they start to realize that factor and they start to monitor and report on impact drivers, they will definitely be able to unlock impact-related funds. So I'd say companies need to widen their horizon. Every company should have an impact perspective or an impact angle, and to start reporting on that part, and just become better at communicating their impact and positioning themselves and their story. Definitely that would help them raise their visibility and again unlock impact investments.
Thanks for motivating on that end. So now looking at the questions we got in the chat, I think the first ones were for Farah. When you started introducing the business, there was a question on whether you could work with small farmers through NGOs or also beyond. Do you want to elaborate on how you engage with smallholder farmers?
Sure. So we work with a variety of farmers, small, medium, and large as well. So we take it on a case-by-case basis to really see what kinds of products that we're looking for and the crop quality and so on. But we do work with a lot of small farmers because their quantities are just more suitable for what we're purchasing. And of course, there's the aspect that we are supporting them, and rather than them traveling through the whole value chain and losing value for their crop, as well as actual food lost, we're empowering them by giving them more money for their crops. So we have, in the past, we have directly gone to those farmers. So we would pinpoint the areas that have the most crops that we're targeting, and then just set up a day there where we invite all of the farmers to come to like an orientation session. We tell them about Fresh Source, and we take their contacts and just their data. So that's what we started doing in the past, and then we grew through word of mouth. Now, in some cases, we work with NGOs. So we're starting to work with the World Food Program, and they will then we will start purchasing directly from their smallholder farmers.
Great. So different avenues that you tested while developing the business model. Thanks, Farah. Then I think the second question related to your impact, you explained in the questions we had. So I will skip that one and jump to a question that we had on funding available for startups in Botswana. I think we have quite an international audience. Hussam, are you working in Botswana as well? Is that part of the geographic scope?
Yes, we're a Pan-African fund. Southern Africa is our lowest allocation, but Botswana and South Africa are both focus markets for us. Yeah.
All right, then maybe Tebogo, I think you asked that question. You can now rethink a bit what Hussam mentioned as the requirements that they're looking at, and inform yourself on the fund scope a bit more in detail. But that would be one example, and I'm sure that that the team from the fund would also be willing to maybe give more advice if it's not a good fit yet. We have another question that says, when dealing with regional startups, the valuation is too low in the most of the times. Don't you think that will limit the startup to grow more? Ruba, is that something you have seen?
Sorry, Aline, can you just repeat the question?
The question is on valuations being quite low for startups in our sector, and that by itself creates a challenge.
Definitely. We always say it as investors that we need to be fair. I think a point that Pamela mentioned, or Farah as well, is sometimes you need to close a round very quickly, and sometimes investors would push you for a low valuation. So it's something that I always say for an entrepreneur and an investor, always be fair and look at things from a different perspective, from the other person's perspective. So yes, they might tend to be a bit low because expectations of return are a bit lower. But definitely if a company has, if you manage to portray your impact KPIs and explain your concept and your business model and show that you have great impact and great potential for the future, this would help you defend your case and get a higher valuation. So it's always going to be a game of defending your valuation and trying to achieve the most.
Right. Thank you, Ruba. And there is one more question, which I'll direct to Hussam, because it's related to Hussam, you mentioning that you know, or you have funders also in your fund that prioritize impact over financial returns. And the question is, what type of funders are they? What is their typical profile? How do you identify and engage them along with the other type of funders that are maybe a bit more commercial?
So I think the person asking the question is assuming that those investors will invest directly into companies, whereas usually the ones I speak to are investors in funds. But it does happen. Can you hear me? I'm getting a message that my network is unstable.
Now it's better.
Can you hear me?
Better. Yes, it's okay.
Hello?
Yes.
If you like, Hussam, you can remove your video just to have more internet.
Okay, we'll see how Hussam is reconnecting, but I think what he said that he engaged more on a funder in funds level, less with funders that directly invest in enterprises, which could be foundations, could be family offices, could be philanthropic organizations, which we don't have, unfortunately, so many in the region. You will find more if you move to Africa or Asia. In this region, unfortunately, not that much that directly invest into climate SMEs. But if he comes back, he can maybe elaborate on the fund experience.
And here, if
Now,
I may, Aline, I would
go
like to
ahead.
elaborate on. I would like to elaborate on the blended finance mechanism. So this is the concept of the blended finance. You have a pool of investors constituted from IFIs, from the donors that would not expect high returns, and from the other side, the commercial investors. So we have the impact investors and the commercial investors. So when blending those funds, we can come up with if you want interest rates and return on investment that is accepted by the enterprises and that will give the expected returns for each type of the investors.
Great, thank you for the addition, Pamela. Now we're almost at an end of the webinar, and there are just two more things. The first one is we'll do a 3-question mini poll to get your feedback on today, but also what we should focus on in the upcoming webinar. Tala, could you share the poll questions with us?
Yes, definitely. Let's launch it. Okay, so the first question is how do you rate your understanding of climate impact investment? So we want to understand from you, how much did you understand from today's webinar? Can everyone see the screen?
Yes.
Great.
So the first question is just multiple choice, and the other questions you can put in a word or two or bullet point.
Exactly. So the second question is, what was the most useful insight in today's session for you? And then the third question is about what you want to learn in the upcoming webinars. So let's wait 2 to 3 minutes. Okay, I can see low participation. Come on, everyone. We want to hear from you. We have 4% participation. Come on, we can do better. We're 27 in this room. Let's wait 1 more minute. Okay, I can see that you guys are trying to respond. So basically, I haven't ended the poll yet. You have a few more minutes. Basically, most of you, I can see that you have a good understanding of the session. That's good. I can't see the other short answers. I have to end the poll. Yes, I can see some people in the middle, which is okay because it's a tough topic. I can assure you that. Okay. So based on your answers, we would basically prepare our upcoming webinars. Your answers are very valuable. We would like to hear from you. Okay. More people are quite understanding of this webinar. They found it useful, which is great. Few more seconds.
Maybe Tala, before you do the closing, I can already mention that the second webinar in this series will take place end of October, and we'll focus here more on innovative end user financing to ensure that customers of our innovative SMEs with climate solutions are actually able to access, afford, adopt these climate solutions. So here in that session, we're working a bit more on a discussion with banks and MFIs, a topic that Water Energy for Food also quite invested in a bit to develop the market and financing opportunities for the enterprises, not only direct investments. And that will be announced in around 2 weeks. But yeah, taking place end of October, and we're happy to have you there, as it's an equally important topic of climate finance, but still at a very early stage developed in our region. So we're happy to share with you some partnerships, pilots, and models that have emerged and are working, and how we could move it up from there. Tala, any more feedback from your side?
Yes, basically, I ended the poll, and you will see the result in front of you. So yes, as you can see, most of you have answered that you've, so share results, right? You can see most of you that you found this webinar interesting and understandable, and that you have found it useful, and we will get the answers later on what would be some upcoming webinars.
All right, we'll
Yes,
do the
great.
qualitative review afterwards. Thank you so much for the speakers, first of all, for your time and sharing experiences in the topic that is developing very quickly, but there's yet a lot to do. So thank you for all your efforts and the great work you're doing, and for everyone who was interested to join and learn today. Have a great day. Thank you so much.
Thank you. Bye.
Right.
Thank you.